Bismillahirrahmanirrahim. Today's our topic is IAS 38. This one is not a big one. This
Mhm.
IAS is not a big thing. This you can say easy peasy IAS. IAS 38 is going to be about intangible assets. Intangible assets are assets which don't have physical substance. All the assets which don't have physical substance are falling under IS 38. Remember one thing, there is a small rule that the non physical existence asset must be under your control. What I'm saying must be under your control and must have a reliable amount of reliable value. Amount must be reliably measurable, and that intangible asset, which you cannot see, which you cannot touch, must be under your control. If it is like that, then we can say that we are going to record an intangible asset. Got me or no?
Yeah.
First thing is, what is tangible and what is intangible asset? So tangible we are aware of, which do have physical substance. Intangible, which don't have physical substance. Here we are not discussing intangible assets. No, I am not discussing intangible assets. Intangible assets are non-current assets which are going to be reported in SFP. I am not talking about intangible asset. In this example, we are just evaluating either this item is a tangible thing or either that item is an intangible thing. Only this. Hala. Then there are some criterias to be satisfied to record intangible things, intangible items as an asset in SFP. So now, first, let's identify tangible and intangible items. First thing is number one. What is number one? The operating. Can you read for me?
Yeah. Operating system of a personal computer.
Okay. Wallahi, operating system is intangible, right?
Yeah.
Microsoft Windows. Microsoft Windows is an intangible thing. But this one is going to be a tangible asset. Wow. Why, sir? Why like that? Wallahi, a software is a intangible thing. We cannot touch the software. We can only feel it. We can look the performance. But remember one thing. In order to be an intangible, it has to be separate item. The software is an integral feature, integral part, connected thing with the PC. It cannot be standalone. So software need the tangible asset. The software is going to be part of the tangible asset. So remember one thing. Always remember one thing. Whatever the software will be is going to be the capital expense of an asset. And if we are buying a computer and we are paying separate amount for the software, so the cost of computer plus the cost of software, we will add them up and we are going to depreciate it as under IS 16. That is a small rule to memorize. All types of softwares are integral feature of the asset of the computer. So that's why they are tangible assets
Tangible.
and will be part of the cost of the asset. Got me or no?
Yeah.
Next one.
Tangible.
Off the shelf integrated publishing software package. This software package is part of your computer, integral part of your computer, or just a software which is going to help you in some other things. Yani
Is integrate. It says integrated.
integrated publishing software package means is connected with the software house, it's connected with the package. Yani integrated means when integrated softwares. which if you do financial accounting, the cost accounting will automatically being performed. Something like that. Integral feature means that the software is mandatory. Without that software, the PC cannot run. That type of softwares will fall under IAS 16 if and only if they are integral part of PC. Integral part means that without that software, the PC cannot work. So operating system is, yes, it is integral part. That's why the tangible asset is going to be part of IS 16, is going to be added in the cost of PC. But publishing software, your PC do have any publishing software installed?
Publishing.
No, I don't have.
Adobe.
Well, yani we can say, sir, we don't aware of what type of publishing softwares are. In my PC, there is no software called publishing software package. I don't have. So without that, my PC is running or no? Your PC is running or no?
Yeah.
So it's running now. So what it is? It is intangible item. Yani without that, the PC can work. Right or wrong?
Yeah.
Now next one, read it.
Specialized software embedded in computer control machine tools.
Okay, a specialized software which embedded in the machine. And a software which is running the machine. You know, in the factories, there are robotic arms, robots. Robotic arms cannot work without the software, right? So here they are saying a software which is controlling the machine tools like robotic arms in the car manufacturing industry. What do you think? Without that software, the machines can work or no?
No.
No. So what do you think? It will be
Tangible.
intangible under IAS 16. Halash. Then a firewall. Okay, firewall. Without firewall, can we run the computer? Can we run the
Yeah.
thing? Yes, we can. Sometimes, if we are browsing some things, we need to switch off the firewall. Otherwise, they are blocking. The firewall is restricting us. So, without firewall, PCs are okay, they are working. So, what do you think? That software, which is called firewall, is a tangible or intangible?
Intangible.
Okay. Very importantly, the most confusing thing is this thing about the software. Normally, as FA level or previous studies, students are always thinking that softwares are intangible because we cannot touch, we cannot feel. Okay, fine. Softwares are intangible, but some softwares remain tangible asset and will be part of the cost of an asset of PC. Why? Because they are integral part, and without that software, the PC cannot work. So that type of softwares are tangible under IS 16, and the remaining ones supposed to be intangible. Got it or no?
Yeah.
Any questions?
No.
Okay. Other than besides the software, we do have many types of intangible assets, which are, you can see, the patent royalties, intellectual property rights, movie rights, films, Shah Rukh Khan, the movie of Shah Rukh Khan, okay, motion pictures, Lion King, intellectual property, the knowledge, the idea, the licenses, the copyrights, the patents, the trademarks, they all are one of the examples of intangible assets. Any questions?
No.
Okay. Now, just assume you identified an intangible asset, mashallah. And Miss Komal identified that, sir, listen, sir. Okay, what is this? Sir, this is intangible. This is intangible. Let's record them. So I will say, relax. If it is intangible, it doesn't mean that it is going to be reported, it is going to be recorded as an asset. No, if something is intangible intangible, you have to check for three conditions. How many conditions?
Three.
Three. Identifiability, controllability, and benefit. Yani the easy one is that intangible asset will bring faida, will bring benefit to us. Benefit in form of increasing the revenue or decreasing the cost. Any intangible asset have to bring us the faida, the benefit, either in form of revenue or in form of reduction of cost. Okay, this is the first condition or last condition you can. Second, the intangible asset must be under your control. It must be under your control. Got it or no?
Yeah.
And the first condition, it is separable, means it cannot be, it cannot be part of our tangible asset like a software operating system, Windows. Windows is an integral part, not separatable. Without Windows, PC cannot work. So Windows is the integral feature of PC. So it is not an intangible asset to be recorded separately. It will be reported as per IAS 16 and will be part of the cost of asset. But firewall, okay, firewall, without firewall PC can work. Firewall is not mandatory. So firewall is separable and firewall is separate thing, separate thing. So that's why firewall can be reported separately under the criteria of IS 38. Any firewall, if it is under our control and if it is bringing us some faida, we can report the firewall, we can record the firewall as a non-current asset in SFP. Got me or no?
Yeah.
Okay. Now one thing. We are going to record, we are going to record the intangible asset on its historical cost. If all of the above criteria, all three satisfied, what we will do? We will record the asset as an intangible asset in SFP at a cost. What? At a cost. Now, its intangible assets are, you must remember, intangible assets are non-current assets. What they are?
Non-current assets.
Non-current assets. So remember one thing, if it is a non-current asset, initially, initially, initial recognition, yani first time when we are recording it, we will record them at a cost, original cost, okay? And year end, year end as like IAS 16, we have two models here as well. Cost model, keep the intangible assets at their original cost, historical cost accounting, or you are, if you would like, you can use the revaluation model. Revaluation model means you can take the market value and update the market value every year. But you remember the consistency approach of accounting. Once we do revaluation, we have to revalue it again and
Yeah.
again. Okay? Year ended, we yani what at initial recognition must be at cost. Year end is gonna be cost model, continue the cost model or revaluation model. Point to remember, which is it's a non-current asset. So it's going to be depreciated, but excuse me, here the depreciation will be known as amortization. We will not use the word depreciation because depreciation is for tangible non-current assets. For intangible asset, we are going to use a terminology which is amortization. The difference between depreciation and amortization is going to be as per useful life. And in other words, only one method, which is straight line method. In other words, only straight line method is going to be used. Only straight line method is going to be used for in order to amortize and depreciate the intangible assets. But you remember, for tangible assets, we have methods. Straight line method and reducing balance method are more prominent methods, right or wrong?
Yeah.
But here only one method, which is amortization method, is known as straight line method. Understood or no?
Yeah.
Okay. If sir, there is a intangible asset which don't have identifiable, which don't have not have any identifiable life. And if there are some types of assets, no life. Next question is suggesting this intangible asset we have, it have no life, any infinite, something like that. So what is,
Mm-hmm.
if it is infinite life, so khalas, we cannot going to amortize, and we will not depreciate it, we will not amortize it, because amortization here for the intangible asset only one method, over life, over life, any straight line method. If there is no life mentioned, halas, we will not going to do any amortization. We are not going to record the amortization expense. Got me or no?
Yeah.
Now the example I am reading, an entity. Here, the entity purchased some rights. Rights are intangible, right?
Yeah.
We bought some exclusive rights to operate passenger and car ferry for how many years?
30 years.
So I can say this is something called license. License for
Yeah.
years. Can you see the in the finite life here or no?
Yeah.
So if we are going to amortize this license cost, it's going to be over how many years?
30 years.
Okay. Next one example. An entity has purchased again a right, okay, to operate what? To operate a
Wind farm for 40 years.
wind farm, okay, wind farm to produce electricity. The cost of wind power much lower than that of alternative power source, okay. The surrounding geographical area is expected to demand a significant amount of power from the wind farm for at least 25 years. Therefore, the wind farm operator amortize the right now. Now, here two lives are given. This is the answer. That's the answer which I'm going to explain you, the yellow highlight, okay? You took license for how many years? The license is for how many years?
40 years.
But the demand for that product or that license, any the license is to produce electricity, na?
Yeah.
And the demand will sustain for how many years?
25.
Okay, now wait. Intangible asset, the condition is must bring us the faida, right? So
Yeah.
also we have license for 40 years, but the faida expected is for how many years?
25.
So license amortization using how many years as a life? 40 or 25?
25.
Why? Because we
Uh,
have to consider the fighter, the benefit, any amortization must be amortization must be using the beneficial life where we are getting the benefit from the use or use of the intangible asset. Got my point?
yeah.
Any questions?
No.
Very good. Now, secondly, there is something called revaluation method, which I just wrote above. Yeah. Mhm. Intangible revaluation model. There are some issues here. There are some points about revaluation model. Very carefully listen. It's part of my handout. I already sent you all the theory which I am talking or I am pasting here. It's from the handout as well. So
Yeah.
normally, if you have a tangible asset, the market value is easily crackable. You can easily get the market value, right or wrong.
Yeah.
It's easy to find out the market value, right? But in the case of intangible asset, it's very difficult to obtain a market value because intangible asset is yours intangible asset which is not proper, which is not having physical substance. So there is no active market normally. Normally, for intangible assets, active market is not available, right? So the important point is how how we can use sir, how we can use the revaluation model. So the answer is in this part here in my handout. Normally, it's really very difficult to find out the market value of an intangible asset because intangible assets are usually specialized assets and they don't have active market like property, plant, and equipment does have or do have, right? But if you have some intangible assets like licenses, taxi license, fishing license, some codes, some list of customers, that type of things, which you can trade in the market, then only you can apply the revaluation model. Because in order to apply the revaluation model, you need active market. Yani you need the market value, no? You do need market value, you must have you must search for the market. And normally, for if you have something which is your specialized thing and you don't have the market value, you cannot do revaluation. So if you have like licenses, customer lists which do have market, then only you can use the revaluation model. Otherwise, it's not possible to use the revaluation model. Got me or no?
Yeah.
Now the next thing is internally generated intangible asset. What is that? Internally generated non-current asset. First of all, internally generated non-current asset can be anything which you can imagine. And if you would like to imagine something, you can imagine. For example, you assume you are a owner of a boutique. Who you are?
Owner of boutique.
Owner of boutique. Name is Komal's Closet. What's the name of the boutique? Formal clothing. Okay. Now you are sitting with your friend and both of you are just talking. Hey Komal, how are you? Komal is saying, I am fine. Now Komal is saying, hey, listen, Sarah, you know, my business, my business, net assets, my business, net assets are $1 million. How much they are?
$1 million.
$1 million. Net assets is the real worth, actual value. But you know, Sarah, my real my business value of business market value you can say is, hmm, you are saying, Komal is saying to Sarah, how much? Tell me, give me a number.
Number four.
Four? Okay. So Komal is saying, hey Sarah, listen, my business actual worth is 1 million, but I can sell that business anytime for 4 million. Wow. So Sarah was, you can say, ACCA dropped out. She passed only one, two papers, and she told you, hey, mashallah, mashallah, very good, very good. Your business have a goodwill of 3 million. Okay, Komal became happy. Wow. And from bachelor level knowledge, Komal is thinking that goodwill is a non-current asset, so I must record it in SFP, so my SFP will be improved. That's all the ideas are coming in Komal's brain, Komal's mind. Just two friends talking. One said my business real worth is 1 million. If I want, I can sell it for 4 million anytime. Okay. So other friend said, oh, mashallah, means your goodwill is 3 million. Just let's record it in SFP. The same thing IS 38 heard. And what IS 38 says? IS 38 says, excuse me, girls, what are you doing? This only you both are talking. You are talking, she is talking, bhai. Okay. If I assume it's a goodwill, you are not allowed to record it because it's not a arm length transaction. It's a goodwill, but it's yours mind, your brain. It's not the real. We cannot record. We will not allow you to record the goodwill like that, that my business is 1 million. But I can, if I want, if I would like, want, I can sell it for, oh no, Baba, not allowed, haram, not allowed to record, just talk. Any talking is not allowed. If you are talking and you are assuming or you are bringing your goodwill up, you are not allowed to record it by like goodwill, brands, must have, publishing titles, customer list. They are all your internally generated assets. You are not supposed to record them. No, never. Got it or no?
Yeah.
But next day, very next day, Komal and Sarah again sitting on a cup of coffee, cup of tea at a Starbucks. Now, Komal is saying, Sarah, listen, I have my business, which do have net assets worth how much? How much? 1 million. And
Mm-hmm.
Komal is saying, I accepted offer of 2.5 million from Rose. Okay. Now, 1 million is the real worth. 2.5 million is the offer. Accept it. Again, Sarah is saying, hey, Mabruk, congratulations. You have a goodwill of 1.5 million. Komal is saying, hey, Sarah, don't be crazy. Yesterday you told me goodwill of 3 million. I was happy and I was recording it. Then IS 38 came there and IS 38 shouted at me and said, no, you cannot record like this. Again, IS 38 will come and IS 38 will say no. But what happens, IS 38 IS 38 came and says this goodwill is not internally generated. This goodwill is no going to be recorded as a non-current asset in the books of buyer, who is the Rose auntie, right? Miss Rose. Why IS 36 is allowing to record this 1.5 million, and why IS 36 said to us yesterday not allowed to record the 3 million? Any difference? Hello?
Yeah. Because
Mhm.
IS 38 is because it's according to her, it's her own internally generated value.
Because the first example, which is written in red color, it is just presumed. It's just assumed. If I want, I can sell my business. If it's not the harmless transaction, it's not a real thing. But in the blue color, wallahi, it's truth. You already have an offer and you sold your business. Khalas. So it's not a internally, it's a real goodwill. That's why you are required to record it in the book of buyer. Got it or no?
Yeah.
That is called purchase goodwill. Because the buyer paid you the extra amount.
Mm-hmm.
The amount anyone pays. Why? Because your business is good enough, or your business has things, or your business has sales, or something like that. That's why anybody will pay you the extra amount, right or wrong?
Yeah.
Okay. Now, one question. This is done. Before I move forward, I have a question for you. The question is very easy. The question is, let's suppose this new thing, huh? This is Mr. A, finance manager. Okay?
Yeah.
Sometimes, usually in Middle East, the employers are saying to the good employees, "Hey, Komal, you are my asset." Wow. What? Usually in Middle Eastern countries, in India, Pakistan, the bosses are saying, "You are my asset." Wow. You are my asset? Okay. I am asking you, is employee is an asset? Is employee is an intangible asset or no?
No.
No. Okay. Why no?
I
Reason.
mean, company can function without him, he can be replaced.
He can be replaced, or if we would like to get the full mark, we need to go here, go up the conditions. Employees is parable. Okay, you can separately identify, this Haji is my finance manager. Okay, he is giving you benefit as well. And he's
Mm-hmm.
money to you, or he's reducing cost for you. Okay, fine. But the problem is the yellow one, the control. You cannot control him. He can leave you. He can die. If he don't want to leave you, one day moth, one day he will die. So you cannot stop him, right? So
Yeah.
employee, because of controllability problem, employee is not as not is going. Employee is not allowed to record in your books of account as an asset. It's just a saying, "You are my asset." Okay.
Yeah.
Now this theoretical part of IAS 38 completed. Now I have some questions which we are going to solve now together. For that, I need the help here. This question is here, and the conditions I am keeping here. Try to memorize the three conditions as soon as you can, because the theoretical area of this IAS, you need to refer the condition again and again, the three conditions, okay?
Mm-hmm.
Economic benefit, control, and identifiability. Now, the question in front of you. This question brought to you by ACCA Study Hub. So, it's a tough question. Which of the following would most likely, okay, result in recognition of an asset? Yani one, two, three. All three conditions need to be satisfied in order to record it as an asset. Am I right or wrong?
Yeah.
Now, first read D. First read the D. Start
D.
D.
KJH has developed a new brand name internally. Directors value the brand name at 150,000.
Okay. Is it an intangible asset allowed or not allowed?
It is not allowed because it's generated
Internal.
internally
Ah,
generated.
very nice. Internally generated goodwill, internally generated brand, anything which is internally generated, you can value it billions or billions or trillions. Nobody can stop you, Baba. But we will not allow you to record it as an asset. Hala. Got it?
Yeah.
Now start with A.
KJH spent 50,000 on an advertising campaign in January 2012. KGH expects the advertising to generate additional sales of 100,000 over the period to April 2012.
Advertisement is an asset.
No.
No, no. Why?
The A.
So advertisement, what do you think? Advertisement is such an asset? Never.
No.
Correct.
It's a
Anything. Expense. Halli walli,
yeah.
Baba. Now B and C. The competition is tough. 50-50. B and C. Tell me.
KGH is taking legal action
Oh.
against a contractor for faulty work.
Mm-hmm.
Advice from his legal team is that it is probable that KJH may receive 250 thousand in settlement. This is contingency
It's
and
a contingent, probable inflow.
yeah,
Contingent asset. Just disclose. Not to record. So B is not
yeah.
the answer. Automatically C is the answer. But why? Copyright. Okay, copyright is an intangible asset. Copyright in film, Shah Rukh Khan. Okay. Uh,
Overrated Shah Rukh Khan.
yes. By the famous author, 75,000. The first manuscript already received advance order. Okay. You can see the value is there. Already the advance orders are there. Yani the thing start performing. It's an identifiable thing. Yes, it is. Copyright and film rights. It's yours because you are doing it. So it's under your control. And you go start getting the orders. The economic benefits, value is also there. So all the three conditions satisfied. So C is the correct answer or wrong or in
Yeah,
confusion.
no,
Okay. If you didn't under this, if we, yani, at that point, we already did IS 37. That's why option B was easy for you. Otherwise, option B, you might not understand what it is. So,
yeah,
in the paper, it will happens like that, that one option they can put from any other IAS or IFRS. It's normal. It happens. Okay. Now, the next question again brought to you by ACCA Accounting Hub. Just read the A part. Capitalize.
in accordance with IAS 38, intangible asset, which of the statement is correct?
Okay.
Capitalized development expenditure must be amortized over a period not exceeding 5 years. That's
Did
wrong.
we never said 5 year, we said finite life or infinite life, right?
Yeah,
So
that's wrong.
from where he bring the 5 year? Halli walli.
Gen Z.
Okay. Next.
If all the conditions specified in IAS 38 are met, development expenditure Maybe capitalize if directors decide to do so. Wrong.
We never discuss the decision of directors. This is not
Yeah.
a condition. If condition
Eh,
satisfied, khalas, recorded it. Who are directors? Halli walli.
Capitalized development costs are shown in the statement of financial position under heading of intangible assets.
If capitalized development cost and if it satisfies the conditions, it's an intangible asset. Intangible asset is a non-current asset. Non-current asset is always appear in SFP. Easy, C is the answer. Why D is the wrong answer, please?
Amortization of capitalized will appear as an item. It has nothing to do with equity.
Asset, Baba.
Yeah.
Intangible asset. Why capital? Why equity? Crazy. The ACC study hub. The writer, I think he didn't have any other idea, so he put like this. Khalas. Now, next one. Again, ACC study hub. Yalla. Think.
A.
Why A?
Because it's patent.
Okay. Patent is a intangible asset.
Yeah.
Okay. Research is an expense. Startup
Yeah.
cost is an expense.
Expense.
Internally generated haram to be recorded, right? Already we
Yeah.
discussed, not allowed at all. So that's the first portion of IAS 38, which is dealing, you can say, which is dealing with the intangible asset. Now I have some more question from Study Hub. Now those questions which I am now bringing in front of you are from the practice session. Okay, practice session of Study Hub. Just read it.
Which of the following is not an intangible asset?
Okay.
Patents, development costs, short leasehold licenses. Not. It has to be one or it can be two.
Anyone. There is only one.
B.
Patent is a intangible asset. Development
Yeah.
cost is the intangible asset. We are going to discuss this one now because the
Oh.
second part of this IAS is research and development.
Okay,
License,
so then C.
yeah, short leasehold. Leaseholds are what?
Rental contracts.
Rental contracts are not an asset, they are expenses, right?
Yeah.
Now the question here is appearing at your screen. You can say this is the new thing ACCA did. Before, yani, before it was not like ACCA used to ask a numeric type thing for IAS 38. But recent update in Study Hub, they put this type of question. So that means now ACCA is also considering to give some questions with numbers on IAS 38. Okay, but easy, not difficult, but you need to identify the intangible asset. If you identify intangible asset correctly, you
Mm-hmm.
will add them up and you will get the answer. There's a box. You need to type
Yeah.
the answer. Okay. So first try by your own, 1 to 5. Try to read and finalize by your own. Then we will do it together.
It's gonna be 70 plus 60. 130,000.
130.
Mm.
Hmm, okay. Now let's see.
Oh no, costs incurred. Only 70. Only 70.
No, before you were right. Okay.
Ah. This
Now
development confused.
development
This
just
next part.
yeah, next part. Assume it's correct. Development is okay.
Okay. Then 130.
Patent purchase is okay. Now, goodwill created, internally generated khali wali. Legal fees, startup cost. Startup cost is the expense. Why not the say number two? Tell me.
Customer list purchase from. There was a customer list, not.
Customer list like internally generated goodwill. If it
Yeah.
if it is not, look, yeah, internally generated items, goodwill, brand, this, and customer list not allowed. But if we are buying, if purchase goodwill, purchase brand, purchase customer list, and if a arm length transaction involved, then goodwill is supposed to be recorded now. So if arm length transaction involved, the customer is also going to be recognized. Got me or no?
Yeah.
So the answer is not 130. It's supposed to be 230. Any questions?
No.
So that is the first part of IAS 38, which we just completed today, which is purely based, you can say, more, yani, is theory, completely theory. Then the remaining part will be research and development, and that is a different thing. There will be calculation as well, but again, this IAS is focusing too much on theoretical part. So the theory of this IAS, intangible asset related theory, we are done with. Next one, we will start the research and development. Okay.
Yeah.
Now, research and development. In order to make some new asset, new invention. This is an invention I did. Wow, my invention, some invention I did, some science formula I did. Okay. In order to make this thing, like COVID vaccine, this is the formula for the COVID vaccine. First of all, I need to do research, right or wrong.
Yeah.
The research phase always going to be expense out in profit and loss. No worry. Yani either successful successful research or unsuccessful research, the research the research phase, all the expenses we incurred during that phase must be expense out. No option. You don't have any option, Baba. Research phase, expense out. What I said? Res-
Uh,
hmm?
you expense in PNL.
Yeah, research phase, all the amount we incurred during the research of the product must be expense out. What is research? Research is something new. Identify, finding, identifying, doing something new. New means which we don't have right now. Doing something new, which we don't have it now. We are doing something new. If we are doing something first time, that is called research, okay?
Mm-hmm.
So research is that doing something new drama, okay? Now development.
Always remember one thing, Nakamura. The development starts once your research is successful. If research is successful,
Mhm.
then only the development begins. After successful research, the development begins. What I said? After
Research.
after successful research, after successful research, development begins. Correct or wrong?
Yeah.
Okay. So development phase, very important phase. The thing is, the problem is, development phase, we have some conditions. If all conditions got satisfied, all conditions got satisfied, we are going to recognize development cost as an intangible asset. But if any of the conditions failed to satisfy, the research is going to be the expenses incurred in that research phase going to be expense out in P&L. If I make a summary, research phase is what? What is research? Obtaining new knowledge, doing something new. That is research. Anything relates to research phase will be expense out. Khalas, simple and easy. Got it or no?
Yeah.
And anything which, and if now research completed successfully, okay, fine. Research completed successfully. Now, after research, the development will begin. Development. If development phase satisfied the conditions which we are going to discuss now, if development phase all the conditions below, we are going to capitalize. Wow, so very nice word. We are going to capitalize, capitalize the development cost. Capitalize the development cost only when all the below conditions be satisfied. But if any condition is not going to satisfy, the development will be recorded as research and it will be expensed out. Got it or no?
Yeah.
And if you are recording development as an intangible asset, you will amortize it if the finite life of development is given, not the 5 years. The life, finite life will be given to you in the paper. The development cost going to be amortized using the life. Got it or no?
Yeah.
The conditions, there's a numeric to memorize the conditions. The mnemonic is pirate. What it is? Pirate.
Right. Right.
P. P for the development will result in an asset which is going to, there is a probability that because of development, we will have probable faida, probable economic benefit. P for the result of development is going to be an intangible asset, and that intangible asset is going to give us faida. Probability is high. Okay, P. Next is I. I, that our intention to complete the development. I means we have intention to complete the development, and R means we do have the resources as well. We do have the resources. Only not like you are doing development, so you will capitalize it. No. You are doing development which is feasible, which is probable economic benefit. Your intention to complete it is there. You do have resources. you are able to complete it, and you are technically sound. You are technically sound to finish that development, and at last, the amounts are reliably measurable. If all the condition, I can say in one line, I am doing a development which is going to provide me the benefits, and I have ability, technical ability, I do have resources, I have intention to complete and use to a development, use the asset which I am going to get after the development, and the amount I am incurring in the development phase are reliably measurable. If all the conditions, pirate, probable, economic benefit, intention, resource, ability, technical knowledge, technically sound, and expenditure, reliable amount of expense, all the conditions satisfied, you will be allowed to record the development phase expenses as a capital expense, as a non-current asset, and later on you will be allowed to amortize it using the life, which will be mentioned to you in the paper. Any questions?
No.
Before we shall move forward, I would like you to read the research and development, the heading of research, this one, and then development. Read it completely, relax, slowly read it by your own. Try to keep the things in your brain.
All these rules.
Yes.
Pirate.
Pirate and the research one, which is on the left hand side.
Yeah. In the development first line, it's getting cut by something.
Oh, okay. I sent you the
Ah,
PDF.
okay.
So it's okay over here.
Done.
Any question? Any question?
Mm, no.
Okay. Now, as you just wrote the pirate, no? Pirate is probability of benefit, intention to complete, resource availability, technically sound, intention, ability, and the amount of expenditure, reliably measurability of amount of expenditure. Those are the conditions. Now this question in front of you. Can you read for me?
Which of the following not a criterion for the recognition of an intangible asset arising from development in accordance with IAS 38?
Okay, which is not the condition. Pirate, which is not in this those 1, 2, 3, 4, 5, 6. Then you
Mhm.
have the correct answer. You need to memorize the pirate, huh?
Yeah. A.
A
A.
is not the condition. Feasible, yes, it's supposed to be.
Yeah.
Ability to sell, yes, it's supposed to be. Probability of benefit is supposed to be. There is no condition like must be completed. Where? Not in those, not in the pirate. So they bring it from their brain, yani Gen Z. Halli walli is the answer, right? Any
Yeah.
problem?
No.
Okay. Now the practice session of Study Hub is giving us a question. Oh, this is now the quiz section of Study Hub. We did it, completed, finished. Now this is the question in the practice session of Study Hub. Okay. Which of the following could be classified as deferred development expense in SFP? SFP, yani intangible. SFP means SFP means intangible asset, right?
Yeah.
Intangible asset. Which cost is this? Development cost. It has to meet the condition of
I.
pirate. Okay, let me bring the pirate in front of you. It will be very easy. In the paper, this will not be available to you. Huh? You have option to give remote exam, no? You will give remote exam or you will go to the center.
Go to the center.
Okay.
Too many conditions for remote. You have to click pictures of where you're gonna write the exam. And
Oh,
I'm sitting in my living room, and there is screen, there is window. I don't know what all they want.
okay, okay. So noise is that. Okay. Now, so you will go to center. So there will be no conditions available there, right? Pirate. You have to memorize. Now read A for me. Can you read A?
120,000 spent on developing a
Okay,
prototype.
wait. It's a developing. Developing, yani it seems something that developing. Okay, continue. Continue.
Prototype and testing a new type of propulsion systems for train. Project needs further work on it as the propulsion system is currently not viable.
Okay, it is developing, it is development, but is it meeting all the six conditions? Is it satisfying all the conditions?
The prototype and
The thing is,
mm,
it's written not viable. Not viable means the benefit is not probable, right?
yeah,
If it is not viable means we are not expecting benefit from it. So khalas, not viable, not beneficial. Until it's not probable to get a benefit, faida from the project, we are not allowed to record it, right, well or wrong.
yeah.
Okay. Number two.
Payment of 50,000 to a local university's engineering faculty to research new environmentally friendly building techniques.
It's a research, Baba. Research is different thing. Development is different thing. We are talking about research, development, not the research. So B is out of the context. Khalli, walli. Got it?
35,000 spent on consumer testing a new type of electric bike. The project is near completion and the project will probably be launched in the next 12 months. M is not yet certain that there is going to be a viable market for the finished product.
Oh, okay.
No,
Not
this
viable,
one.
not faida. Khalli, walli, right?
Yeah.
Option D is the answer. But why? Development, new packaging energy, something like that. Packaging is expected to be used by M for many years, expected to reduce the cost, expected to reduce the cost. Probable benefit is there, right or wrong? So C is the answer. Project have to be viable if you would like to record it as an expense. Got me?
Yeah.
Now, for you, the next question will be easy. For those whose English is a problem, they can't solve the next question because here they use the British style to twist the English. Just read.
Which two of the following conditions would prevent any amount of the development expenditure to which it relates from being recognized as an asset?
Can you explain me what this guy is asking?
So, which two conditions need to would stop it from being recognized in the development expenditure?
Yes, now search.
Development is incomplete or unlikely to be. C.
Yes, two.
Uh,
We never discuss A, we never
no.
discuss B. So they both
So
are
B.
not conditions. C funds, yani resources, right?
Hmm.
R. Pirate, Piro. Uh-huh. I have a step above here. Just I am highlighting. This one is resources, this one. And completing the expected to exceed the benefit. If cost is high and benefit is low, number one, probability of FIDA is not there. If it is not FIDA and if the funds are not available, we are not allowed to recognize an development cost as an asset. So 2B and C are the conditions which are not satisfying any pirate conditions. We need to highlight two pirate conditions which are not okay. Because of that, we are not recording the in development cost as an asset. Got me or no?
Yeah.
Okay. Last question, and this chapter is khalas, finish, bye bye. Next class, we are going to solve, inshallah, the Kaplan kit of this topic, and we are done with IS. Today, we are done with IS 38. Tomorrow, we will do a OTQ. Yani next class, inshallah, we will do OTQ, dexterity from the Kaplan kit, which is a full question of 10 marks on this topic. Okay.
Yeah.
Now,
And this is my homework.
no, let's do it now together.
Okay. what amount will RD expense? Profit or loss?
This we will do together. First, I am reading. RD has some figures. Number one is the research. What it is?
Research.
How much? 267,000, right? Always remember, we already finalized that research need to be expense out. Correct or wrong?
Yeah.
Now here they are doing a drama. Be careful. It's like accounting. They are seeing development cost, BD. Development cost, BD. 305,000, right or wrong?
Yeah.
Development cost, CD. CD, closing balance, like this. Correct or wrong?
Yeah.
And the development expense incurred during the year. Expense, development costs incurred during the year. Development costs incurred during the year. How much? 215. And the write-off, any expense out figure will be the balancing figure. How much?
520. 145,000.
145 is the expense out written off, no? Written off means expense out. It's the other word for this. Research always expense out. They are giving you balancing figure for the development to be expense out. So total expense out, RD expense. Total profit and loss expense amount is gonna be 267 plus 145. Come has how much? Easy question. But if we not do this question in the class, if we not do this type of question in the class, in the paper, if it appears, the students will not be able to solve it. Got me or no?
Two. Oh. Oh. Expense. This part I didn't understand.
Huh?
Just this last part I didn't understand. Why we added it together?
Okay. Read the bold line, read the requirement.
What amount will RD expense to profit or loss for research and
Mhm.
okay, that's the development cost, and then we add the research.
They are asking the expense out amount, right?
Yeah.
So the expense out is in the research. Research is an expense, but the development there is a expense out amount. So we just took the research and the development, which is the expense amount, and add them up to get the answer. Got me or no?
Yeah.
Okay.
Okay.
Okay. Mhm.
So with this, we're complete with IAS 38.
Yeah. Size 38 is now done. Next class, inshallah, we will start Kaplan kit for IAS 38, and then we will move forward to the next IAS. Okay. And I
Yeah.
would, and this is the end of IAS 38.